I think having the fireside chat with the minister was very helpful because he did provide a very comprehensive coverage of the reforms that have been undertaken and the fact that Nigeria is now back on the path of economic stabilization. But having said that, and I know that the minister labored the point that whereas the economy is growing, it still hasn't met the target of 7%. I'd just like to say that I left the African Development Bank in 2017, came to Nigeria in 2013. The target then was 7%, and we are at 4%. So I'd like to live in Nigeria long enough to see that we surpass the 7% growth. I'll start off with the World Bank. I saw that the minister was at pains to explain and sell the package of social protection initiatives. Having been an economist for most of my life, at least 40 years, I will disappoint all of you by saying that the current design of social protection initiatives is not something that I believe in. So, Matthew, perhaps you can tell us if you think that over and above the current social protection measures, which I believe are really cash transfers, according to the figures that I have, 5.5 million households have been reached, but the minister claims it's 8 million, and a total of 75 million. What else can be done to protect vulnerable households and to lift millions of Nigerians out of poverty?
Well, first, I wouldn't underestimate the importance of the cash transfers. People have different views on this, of course, but in a situation where the economy has gone through such stress and people are suffering, I think there's a real role for transfers that effectively target the poorest of the people. And what the minister was referring to was the introduction of a system based on a social register connected with the national identity, which then allows these transfers to happen in a much more transparent and fast way. So I think this is an important tool for the government that they should use. Beyond that, beyond the raising of millions of people, that's the overall strategy for the government that generates growth that actually benefits people. And here this would include, beyond the macro stabilization and a good environment for the private sector, it would include investment and support to industries where the poor can benefit. Agribusiness would be one very good example of that. But there are others, but I think what the minister was referring to, and what I think is also the case, is that beyond the basic support and cash transfers, what will get people out of poverty is the kind of inclusive growth that moves people in a sustainable way out of poverty for generations, as you've seen in China, as you've seen in India.
Just to probe, obviously job creation is necessary for inclusive growth. But does the ministry or does the government of Nigeria have adequate fiscal space to do this? I mean, the fiscal deficit is over 4%, fiscal deficit to GDP is over 4%. We know that we have an election in the horizon. That's the elephant in the room. So is there enough fiscal space to create more jobs and to have this inclusive growth that we are talking about?
Well, more needs to be done, but I think that there are achievable steps. So the first is what the minister referred to, which is implementing the tax reforms that are coming. I think this is critical. The second would be actually a discussion with the states, because part of what has happened with the design of fiscal federalism is that the states have actually gotten a lot more revenue, and a lot will depend on how they spend that money. So a compact with the states, I think, would be very effective. And then there are two areas where Nigeria is really unusual internationally, which can generate actually substantial income. The first is the amount of revenue that goes to the Revenue Collection Agency. In 2024, it was 1.7 trillion naira. Now, this is completely unusual in an international context, and if it comes down to international levels, that will yield significant amounts of revenue. The other space where Nigeria is unusual is the single treasury account. So as the minister pointed out, the single treasury account is not functioning in the way that it should. If that happens, that could also yield very significant amounts of revenue. So these 4 steps could actually transform the amount of revenue that's available to Nigeria, and it's doable.
Thank you. I like your optimism, and we'll be watching this space. I'll now turn over to my sister, DG DMO, Pato Niha. I've known Pato Niha since I arrived in Nigeria, and I must say that I'm highly impressed that you're still trying to reduce the debt burden of your country. So total debt stock is estimated at over 70 trillion as at the end of the first quarter 2025. Debt to GDP ratio is at about 40%. The GDP rebasing notwithstanding. Is this sustainable?
Right, I'm happy to reconnect. You are right there. Debt to GDP ratio is about 40%. And straight to your question about is it sustainable? I think when we talk about debt to GDP ratio, so we see people looking at how that rate is increasing. I'd like to say, first of all, that the World Bank and the IMF do have a threshold for what the debt to GDP should be as a measure for countries similar to Nigeria, as well as when you use the debt sustainability analysis framework that we use. That ratio is 70%, so that's the first thing to say, that there is a standard. And at 40%, we are below that ratio. We have been below that ratio a long time. So that's the first point to make. The second point really is, if we look at the debt to GDP ratios of many countries across the world, whether countries similar to Nigeria or the advanced countries, their debt to GDP ratios are much higher than that of Nigeria. Okay, so, but we're concerned about debt sustainability because of debt service to revenue. And I think a lot of these discussions have been around debt service to revenue ratio. That has significant implications. One of it has to do with the fiscal space, which Barbara just talked about. If you use a lot of your revenue for debt service, then you have less to spend on priority projects. That's one. But debt service to revenue is also one of those indices that the rating agencies and indeed the development partners will use to assess you, to evaluate you. And thirdly, we know there's also a risk that if debt service is too high, it could really just tilt your economy in a direction that you don't want. Okay, so debt service to revenue is where the focus should be. On debt to GDP ratio, the ratio is not high, whether by the standards, suggested standards, or by other countries. So in terms of debt service to revenue, obviously the government is still borrowing to finance some very critical projects, and the borrowings can be deduced from the budget. It's very transparent. So what can we do about debt service to revenue? Really, the issue has to do with revenue. We've been at it very many years, where debt service to revenue to GDP has been low. At one point, from a World Bank study, I think that was 2020, out of about 200 countries, this is the World Bank's economic outlook, Nigeria was number 198 in terms of tax revenue to GDP. So clearly that's not where we belong. So the focus should be on growing revenue so that debt service to revenue ratio can be lower. And the expectation is that when the debt revenues grow significantly, perhaps the rate of borrowing may slow down, but more importantly, we can service debt conveniently and still have enough fiscal space for critical projects. While we worry about debt service, and it's probably every day in your face in the media, the reality is that one of the beauties of the Fiscal Responsibility Act and the DMO Act is we need to do the debt service projections, so you see them explicitly in the medium-term expenditure framework, you see them in the budget, so they are provided for, they are appropriated for, and we are able to service them. We have seen a few issues with countries around us. I don't want to use the word, but the word is distress. But somehow we have, with proper medium-term debt management strategies, have been able to survive. So with the focus on revenues now, and from both oil and non-oil, we expect to see debt service to revenue drop significantly. Thank you.
Thank you. However, I'll probe. If I'm not mistaken, in the media recently, it was reported that there was a cap on domestic borrowing. This is very welcome, but listening to you, you're saying there's still borrowing continuing, and I'm just wondering, was this just a political announcement, and is it really realistic, given that the 2027 elections are in the horizon?
Okay, I would say I don't think it's the second option, and public financial management is very much in your face. So you have the medium-term expenditure framework, and a new one is being worked on. You have the budget, you have the medium-term debt management strategy. Those define, your borrowings and the split between domestic and external. So let's wait for the medium-term debt management strategy for 2026 to 2028.
Pat is my sister, so I'll just let her off the hook. However, the response that you gave that Nigeria's debt is sustainable because you're below the threshold.
No debt service.
Same response that you gave me 2013 to 2017 when I was at the African Development Bank. At some point, whether you're below the threshold or not is not what should be a measure of whether your debt as a country is sustainable.
Let me quickly add, Barbara, I think I talked extensively about debt service to revenue. That's where the challenge is, not debt to GDP. The challenge is in debt service to revenues, and we are seeing clear actions being taken on revenues, and the numbers are very much in the public space.
All right, let's move on to Kemi, that is representing Murphy. I'll start off by asking you a cheeky question. Does the public understand Murphy and its mandate, or is it just another quasi-AMCON?
That's a very good question, and thank you, Barbara, for giving me the opportunity to talk about that. So come February 2023, there was a restructuring of the Murphy as you have it today. Many of us may not know that Murphy was actually incorporated in 1959. Yes, it's older than Nigeria at independence. And it has been in existence for that while, but only as a unit within the Office of the Accountant General, as the shareholder of record when the federal government of Nigeria made investments. But with the restructuring in February 2023, the government gave it a boots-on-the-ground structure, so a board and a management team that has been driving the business over that period of time. And with that restructuring, Murphy was given 3 key mandates. The first is to identify, enumerate, and establish what the federal government of Nigeria owns in terms of assets. If you're asked that question in terms of liabilities, between the DMO and the Ministry of Finance, you get a pretty accurate answer to the cent or to the dollar, to the kobo, to the naira. But on the asset side, that question isn't well answered. And so the first mandate for Murphy is to establish that central repository where federal government is able to say, these are the assets we've invested for in the last 65 years. The activity of those investments have been done by several ministries, departments, and agencies. And so you have those records at those levels, but not at a central level, to the extent where the federal government can start to leverage those assets to be more beneficial to the activities of funding and financing at the federal government level. The second mandate was then to professionalize or more professionally manage those state-owned entities that are owned by the federal government. If you look across these entities, it's a story of corporate governance not operating appropriately, and we all know of the direct correlation between appropriate governance and the performance of enterprises. So MOFI is asking those questions, or MOFI was instructed to ask those questions, and to ensure that companies that are owned by the federal government of Nigeria, and there are quite a few of them across different sectors, the NNPC, which we all know about, Transcorp Hotel, where we are today, where the government has a minority stake, and the story of why it's 11.4% stake is a story for the ages. The federal government started with a majority stake in this business, but it has dwindled over the years because the government hadn't taken advantage of corporate activities like rights or the corporate actions within that business. You also have the Bank of Industry, the Development Bank of Nigeria, the newly established Nigeria Credit Guarantee Company, the Bank of Agriculture. The federal government has quite a large shareholding base in several state-owned entities. And so the mandate for MOFI is to work with those entities to improve their operations through governance. If you ask a typical state state-owned entity they need today, many of them will say capital. But beyond the capital is the capacity and institutional building that you require, so when you put those capital in those businesses, the capital will operate in the way that it should. And then the final mandate for MOFI is to be that platform that directs capital or pulls capital together for investments in strategic areas or sectors of priority of the federal government. And we have quite a few examples in this line. The recently launched MOFI Real Estate Investment Fund is one of them, where the government seeded 250 billion program. Actually, it's a trillion naira program registered with the Securities and Exchange Commission. But that first tranche was the federal government committing 150 billion naira as seed to de-risk and to encourage private sector capital. The private sector has followed with its own tranche, a private sector tranche, invested in by PF. Pension fund administrators, insurance companies, banks, of 100 billion. And that capital of 250 billion is being directed, by the way, using existing entities within the housing ecosystem. So working with the Federal Housing Authority, the Federal Mortgage Bank of Nigeria, Family Homes Funds, other entities within the federal government ecosystem to direct and mobilize mortgages to Nigerians today. Even though that program is only about 6 months old, we have almost 1,000 mortgages issued today. And the progress will continue. So those are, to answer your question about what MOFI's mandate is, I know and we recognize that it's newish. It's very strange for state-owned entities to have MOFI asking the kind of questions that it asks about governance, about why are you not paying the federal government of Nigeria dividends. But those are the questions we're set up to ask.
Okay, thank you. Thank you very much. Thank you. I hope that you will continue sensitizing the public to what MOFI is. But having said that, have you put in place a tracking mechanism, in particular, because the minister did say optimization of government-owned assets? How are you monitoring this? How sure are we that you're channeling this into productive investments?
Thank you, Barbara. And you ask a very important questions. Aside from being a newish entity, and so a lot of the sensitization has to continue to happen, I would say that still to today, the first thing you have to, first of all, give comfort to a ministry, department, or agencies. We're not here to take your assets. That's the first perspective, because you need to understand that they have been custodians of these assets for the last 65 years. You've had it's almost like a father who had the child, disappeared, and came back now that the child is a grandfather and says, how have you been doing? So no one is, it's going to take a while for MDAs to start to understand the role that you play. But that journey continues. We, first of all, have gone through a sensitization phase and getting to know these portfolio companies. And by the way, it's not only state-owned entities. Federal government also has different assets across real estate, infrastructure, specialized assets, including the creative arts. And so we're also going through the process of enumerating those. But specifically to the state-owned entities, yes, it's first an assessment of where the problem areas are. And the Honorable Minister made reference to this as well. It's also a case of, should this company be sold at this point? Does it still need further investment? Is there still one way for growth so that the outcome is most beneficial to the Treasury? Or is this one that we should actually hold for now, or hold, because it's such an important fiscal policy tool of the federal government? So those are the kind of thoughts or decisions that we go through when we try to think about what's best for optimizing these portfolio companies.
Thank you. So just before we close this panel, and I believe we've kept within our time, I'd just like to ask each panelist, what one policy priority over the next 5 years do you passionately believe in and hope will lead to a much more prosperous and inclusive Nigeria by 2030? World Bank, start with you. One policy priority that you absolutely believe in.
The World Bank never has just one policy priority.
I know that, but you, Mathew, as an individual, that absolutely be. I've moved from the World Bank to Mathew. Oh no!
Look, Nigeria put in place a trade regime meant to develop its domestic industry. That has not worked out very well, and today has led to Nigerian firms that need to import capital goods and intermediate goods very high prices. With the first round of reforms, I think a big bang approach in this area could spur both domestic and foreign investment in Nigeria.
Thank you.
But I have a lot more.
Part one policy priority that you're passionate about.
Okay.
Like to see achieved?
I would say much higher revenues that are properly, efficiently collected, accounted for, and judiciously utilized. That would be it. Thank you.
Amy, final word?
I'm happy I thought about a second one, because that's what I was going to say.
You bring it.
So just domestic resource mobilization. I think that the opportunity for Nigeria over the next couple of years is so immense, but we cannot continue to wait for capital from the external sources. And there is a lot of capital in-house, so domestic resource mobilization and investing in those priority sectors.
Thank you. Thank you, everyone.
Thank you.